Here we are. Recording in progress. Right, guys. Good morning. Hello. For those that don't know me, my name is Salis. I came here to the school to help out a little bit with any of your questions if you may have. Trying to help you with the tools, trying to help you with the charts, trying to help you with the emotions, the approach, the strategy, the psychology, everything. I'm also a trader from the Well Room as well. So I speak as well on the behalf of the Well Room. I will give you some insights, what we do in the Well Room, how we approach, how we see things, a little bit more, let's say, more advanced. A little bit different how we do things, from the school. Stafford School and the Wells School, it's an introduction. And very good lessons. You learn a lot, but it's very different, from learning the theory to go to apply the theory to make it, in the real world. Things change. The psychology change. Since you put money into a trade in the market, all the emotions kick in, fear kicks in. Fear of missing out, fear of missing, losing the trades, fear of seeing the red candles, fear of, seeing a little bit negative numbers, fear that you're losing your capital, everything is like, a race with your emotions. So that's why I'm here, to help you out a little bit, to share my experience, to share my thoughts, to share my practices, listen to you. See what kind of problems you may have, or you want to double check, an approach. Maybe you don't know exactly how to use a tool. That's why I'm here. Right. Somehow, I don't know what happened with Discord. That was meant to be on the events. You can see my events. That's supposed to be every Tuesday, but I don't know what happened today. Somehow it got skipped out. So if you scroll down, you see I have a prefix for all the future events for August, but it's supposed to be, this week's as well. I don't know what happened. It just lost the July one. So I had to add one today. So unfortunately, I see a lot of people did not get the message that, I have 100 people here are interested, and today we only need 10. So yeah, so that is a last minute announcement. We found out this morning. I spoke with the school community that the event's supposed to be up. People don't know, they don't see. So instead of me canceling the event, what I've done is postpone. Push it a little bit further down for people to see the announcement and make their way to the live. But okay, sometimes it happens. The head of community did tell me that they had some problems with the Discord lately. It's playing games, so another hiccup. I don't know. They're doing updates. I don't know. I have no idea. Anyway, so before I proceed, do we have any questions? Would you like to see something specifically? Please don't be shy. Come up and say hi, or if you don't want to come up and say anything, you're more than welcome to write down something on the text. I'll read out your message, and then we'll take it from there. And it's quite a bit interesting today because it's only going to be 10 of us, so it's more private, like a small class. It's a good one. So take the advantage. Come up with your questions. Let me know how you guys doing. Everything okay? I will have some questions about smart money questions. Smart money concept, I believe. Is that the one that you're looking for? SMC concept. Yeah. Okay. Cool. It's a very good technique, if I can say, right? If I may say, smart money concept was designed under the Forex environment, and the reason I say that is because the guy that created or developed, so to say. Let me go into YouTube. The guy that developed is called ICT, right? ICT. Here's the guy, right? The Inner Circle Trader. Okay, he's the engineer, right, and the creator behind all smart money concepts. He's the one he developed that strategy or technique, so to say. But he is focusing on Forex, right? So the question is, does it work on crypto? It does, but we need to do a variation. We need to tweak things around because he's very strict with his rules and conditions under the Forex environment. But the Forex environment is a little bit more, let's say, under control. They're not so volatile. They have huge liquidity, but they're not so volatile, right? They're very, very minor movements, very many minor movements. So if you want to learn about the Inner Circle ICT or smart money concept, you're more than welcome and follow him. Make sure that you have the original account. Is at Inner Circle Trader. No symbols, no dots, no underdash, right? And the first letter of each word is capital. So the inner with the capital I, circle with a capital C, trader with a capital T. All of it is all here. Can I share this? I think I can. Can I share? Let me just click his ticker and I'll show you his ticker to you. So here you go. Gonna put that on the message. So that is on YouTube, and then I'm gonna do his link on YouTube direct. So here you are. It's him. Follow him. He's got a lot of sessions, long hour sessions, very advanced. The way he approaches and the way he describes things, it's a bit advanced. It's going to take you some time for you to understand, right? And then you need to understand the differences on crypto space that we need to do other tricks, okay? So don't trust anyone else that he talks about the smart money concept. He is the one. Okay, he developed it. He's the one. He's your source, so to say, right? So go direct to the source. He's the one. Now, in general, we have. Yeah, I mean, it's. I know you're trying to compare. It works everywhere, but the conditions that they have, unfortunately, doesn't work on crypto space. For example, he says that you need to tap 50% of your order block or 50% of your fair value gap, right? In crypto space, because we were so volatile, we don't even reach the 50% of the range. We don't hit the 50% of the fair value gap of the order block, and it's like a touch and go. Like the price, let's do a small demonstration. You expect the price to come back to an order block. Let's say that you design an order block, right? And you expect to come down to the 50%, and then you're going to expect a bounce. In crypto space, majority of the times, it hits the top of the range, and it turns around. It doesn't even go to the 50%. Or other times, it goes all the way down, do a small fake out, small deviation, and then turns around, right? And then people get mixed up because they see the price action miss the 50%, and say, oh, it's not bouncing, let's go short. It goes under a little bit and then turns around because of volatile. And then it messes up all the traders, the long traders and the short traders. And they go bananas, right? So it's like really, really, really nasty, if I may say, in the crypto space. So, because, I know the technique, I've done some variations and say that I need to tweak a little bit the conditions for people not to, fall for the mistakes, so to say, in the crypto space. And then while I was trying to do that, then I came up with an easier solution, which is we call it the twin method, right? Which is basically what it is. I use two indicators together, which is the SRSI. It means the stochastic RSI, right? Plus the RSI together, okay? So what I've done conditions that I need to see on both indicators at the same time, right? And that was why, because I was trying to figure out what the conditions I can use for the crypto space, for the smart money concept. Okay. Now, a lot of people that they use the smart money concept, we have other traders in the crypto school that they use smart money concept, like Fefe, he's using the smart money concept. Raisin is another trader that he's using smart money concept. They left from the crypto school community, so to say, and then they made their own community. Fefe is working very closely with Ron as well. But if you follow him and try to, understand his ways, is based on smart money concept. But they don't trade only crypto, because crypto can be, messing around with the trades. So you can see a lot of times that Fefe and other traders, not only Fefe, he's going to be doing some forex, he's going to do some stocks as well. Because why? Because smart money concept behaves better under these markets. I don't trade forex, I don't trade stocks, I don't trade commodities, not because of any reason. I'll tell you why. The simple reason is because out of all markets, right, commodities, forex, stocks, crypto is the most volatile, right? What does it mean? How you translate that? It means that it makes bigger moves, right? Like crypto, that can be forex, right? That can be commodities, and that can be stocks, right? The movements that you have in crypto space, it's way, way bigger. What does it mean? It means that, the percentages are greater, okay? In a day, Bitcoin can move, let's say, 2, 3, 4% per day, right? Can move 5%, can move 10%. 10% is not often happening per day. Let me go to the chart and see. This is a daily candle, right? This is a daily candle. So let me measure one big candle represents one day. The one day it drops Bitcoin all the way from here all the way down there, 9.9%. And the next day it goes from here all the way up there, almost 12%. So crypto space, like Bitcoin alone, is volatile. One day is giving you 10% to the down, the next day is giving you 12% to the up, right? In crypto, in forex and in stocks, you don't get this. You get 1% or 2%. And when you get like solid 2%, 3%, people in the stock market, they are crying. They're really crying. They're committing suicide. They're jumping out the windows. Why the stocks drop down 2%? It's the end of the world, right? It's major issue by dropping 2 and 3% per day. And Bitcoin is laughing, it's like, hey, I can drop 5% and 10% per day. Look at that movement here. That range, 14.4, right? It's not ridiculous, but what I'm trying to say is that Bitcoin is more volatile. And now you have the opportunity, right, to use even altcoins. So let me use the altcoins. Let me go to the focus playlist and use random AVAX, right? So let's go to AVAX and let's measure that candle that happened on the 21st of July. How much was it? All the way to there, it was 13.5%. The 21st of July. So let me go back to Bitcoin to compare with each other. The 21st of, let me use different. Okay, we are all nice and clean. Let's go to the 21st of July. Where is it? Is that the one there? No, 26, 24, 21. Here we are. So here's the 21st. Bitcoin moved. How much? Let me measure that. 3.7. And AVAX moved 13. Right? So here we are. We have BTC. Let's put the Bitcoin sign here. It only moved, let's say, 4%. Right? But AVAX moved 14. So the altcoins are even more volatile than Bitcoin. Okay, so you can say that is AVAX is 3 times, right, more faster or more volatile than Bitcoin. So if Bitcoin sneezes, right, the altcoins are gonna pump or dump big time. So if Bitcoin is gonna move 5%, 3 times that, 15%. If Bitcoin is gonna move 10%, AVAX will move 30%, right? So it's more volatile. So why, what do I look? I look for price action or charts that they move. They give me a good, nice percentage. And the way I see this is like this. It's very simple. If I have a chart that is moving, then it means I can risk less. Now, if I wanted to go Forex and crypto, compare Forex and stocks and get crypto, let's say that I have equal amount of money. I have $100 in stocks, right? And I have $100 in crypto, right? So if crypto moves up, only Bitcoin moves up by 10%, right? Let's go 10%. And I do a 10x, that is 100% profit, okay? That is on 10x to get that 100% profit. Now, if stocks move only 1% per day, that means I need to do 100x leverage to get the same results. And which one is more riskier or which one is more safer? The one that's giving that you need to go with 100x, or the one you only need to do 10x? And I said, okay, that means in crypto space, I will use less leverage and I get the same results. And another trick that you can apply, because what is more important? Is it more important to have high leverage or for you to have a bigger position, an entry position? What do I mean by that? Let's put a little bit of numbers here. So let me use a text instead of me writing, because my Picasso skills today are not good, right? So the charts, it's not the canvas here, it doesn't help. So is it better for me to do, let's say, for example, let's say I enter with $100, right? And then I expect with a 10x leverage, I expect to have, let's say, 100% move, right? Well, that will be equal to what? Plus $100, right? Let me do that. Right, so that will be plus and not equal sign. Here we are, plus 100 profit, okay? So if I start with $100 on the 10x leverage and then I stop my trade on 100% profit, what did I made? I made $100. So I double my account, right? 100% profit is double your account. A lot of people will get very, very excited about that. And I said, okay, cool. Let me use another example. What if I go in with $1,000, right? Here's $1,000. I use the same leverage. I want to change that, 10x. But this time, I want to get out at 10% move as a 10% profit, okay? So how much is my profit here? What is the 10% of $1,000? It's going to be $100, right? Am I right? Is my numbers right? 100% will be 1,000. 10% will be 100, right? So look at the risk. You use the same leverage. Here we are. We have the same leverage. Nothing changed. Same parameter, right? The only difference that we had different starting point, different size, position size, how much you deploy on your trade. And then obviously you had different targets. You need to wait to get 100% profit in order for you to make $100. On the other hand, all you need was 10% move and then you still make $100 profit. So, two lessons here for you to know. Low leverage as much as possible. Why? Why low leverage? Because I am already in a volatile environment. I am in the crypto space, which is more volatile than Forex and stocks and commodities and stuff like that, right? So anyway, crypto is more faster. So I don't need to use high leverage. A. B, I can even use, right, altcoins, which are even more volatile. So I can even decrease my leverage. By decreasing your leverage, what does it mean? You risk less. Your liquidation price is far, 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 far away. You need binoculars to see them. You should never experience, I mean, this is theory now, you should never experience liquidation. It's a very sad event for a trader to experience. It's a very sad experience to get liquidated, and it's a psychology killer. It's going to kill you. You know, once you get liquidated, you're destroyed emotionally, right? Emotional damage. And also the position size, if you're trying to go a bit larger, you don't need to be exposed as much in time until you get the 100%, even 10%, it will give you a good return. Right? AVAX, you love AVAX. Hello, Terry, my queen, how are you? It's nice to see you. Where are you? Where are you? Here you are.
Good morning, fellas.
Good morning. How you doing?
I thought I'd pop in and tell you about my AVAX.
AVAX. Yeah, I know.
We are friends again, but it took me about 2 years before I traded after being liquidated, so I understand it.
yeah, it's true. It's true. I mean, you know, guys, you know, once you get liquidated, it really makes you doubt yourself. It's going to make you doubt your strategy. It's going to make you doubt your knowledge and then your judgment. And it's going to make you scared to re-enter the market. And this is where a lot of people lose the opportunities. They get smacked.
I must say, everybody gets liquidated at some point.
Yes,
so
that's true.
It's how we actually deal with it going forward. And for me, I've been very blessed with having a team around me. So when I'm in a state with a trade, because I've been working too hard, Thalis is the man that Thalis, help! And you know, we've each got someone to back us. So if you've got someone you trade with, you actually, for your emotional and mental, it's really good. I'll just post something quietly in the WhatsApp and Thalis goes, "What's going on?"
Yeah, I'm like, what have you done again?
What have you done again?
Yeah, it's quite funny. But anyway, I mean, you know, sometimes, you know, I mean, when you have, let's say you are biased and you feel positive about the market, that it's going to go well, Bitcoin's going to do well, everything is looking, you know, positive. And then you place a trade for long, and then all of a sudden the market goes against you. And then you have this disbelief. Oh, it's going to turn around. It's okay. It's going to go a little bit lower. It's fine. I have this under control. I can manage it. And then it goes lower. And you say, no, it's fine. And then you think about it, but you're still committed, right? You still believe that it's going to turn around. And then it goes even further down. And that because you don't want to really believe that you made a mistake, which is not, that's not the case. I guarantee you, this is not the case of you being wrong or right. Why? Because the markets are random walk. It means it can go either way at any given time. Pretend that you are a detective, right? And you are following a person, right? So let me draw here a little person. Here's a little person, right? And you're right behind him or behind her, right? And you're wearing your little hat and you have your little sunglasses there so they don't see you, right? So you don't know where that little person is going to go, right? You follow it, right? So at any point, it's going to turn left, right? And then it's going to turn right, and then it's going to go again right, and then it's going to turn left again, and then it's go all over the place. What do? You follow, right? You don't know exactly where it's going to go. Because if you knew where that person will go, you will never be following. You're going to be expecting that person on the next corner, right? So this is how the markets move. They move randomly. You don't know What are they going to do? Are they going to go up or are they going to go down? You don't know. You have no idea, no clue whatsoever. That's why you need to be careful and you need to be fast on reacting, right? So it's no point you following a person and that person turns left and you still going straight. You're going to lose a person, right? So you need to make quick decisions. You need to act fast, or let's say react fast, because the market is acting, you need to react. So be careful. It's not about you being wrong or right. Why I say that? Because we're trying to develop a TA strategy or a habit. We have a TA. All you need is one strategy in your whole life. One strategy, I promise you, one strategy. I'm not going to tell you which one you're going to follow. You're going to follow the one that makes sense to you. But if you understand one strategy and makes sense to you, you lock it down. It's yours, right? Keep it. You're trying to improve it, it's fine, but don't change it. Keep it. One strategy is all you need. So when you have your TA and you see that the price action is going lower and lower, you see a downtrend, okay? So what's your bias? Your bias is like, I think we're still in the downtrend. So what kind of setups do I look? I look for shorts. You're biased, right? And then let's say that you did not see that it's holding support here and you place in a short. And the market decides to go the other way around. Remember, random walk. Now, is it, let's say, valuable or is it reasonable for you to sit down and cry, so to say, in a little corner of your room and say why I was wrong? No, you are not wrong. You took the previous history, the price action, and you say, I see a high, I see a low high, I see another low high, I see another low high. What are the possibilities? I have high possibilities to go lower. I have no evidence of going up. So why you should think about long? You should only think about short because that's the direction. So if the market turns around, random walk, you should not spend one single second, not even a minute, not even a single second for you to doubt yourself and go like, oh shit, I was wrong. I'm not good. Oh, my strategy is wrong. I've done this wrong. I didn't see it. I'm useless. I'll close the whole thing. Throw the laptop outside the window. No, don't do this, right? You're like, oh, you should. This is how you should be. Oh, I see. You cheeky. You turn around now. Okay, you turning around. I'm turning around as well. It's simple. If the market wants to turn around and give you evidence that it's turning around and it's going for a new trend, it's fine. It's fine. You go long. What happened is the timing, right? You saw the whole price action going lower and lower and lower, and your timing just happened to be in the wrong spot. Your timing, because you thought it's going to carry on go down, and the AVAX decided to go the other way around. So your timing was wrong, not your strategy, not your TA, not your probabilities, because you are trying to see what are the chances. 80% to continue to go lower, 20% to go higher. And what are you going to do? You're going to take the higher chances, right? The high probabilities. 80% is going to go lower. I'm going for that. So it's not a case of you being wrong. So please, never doubt your TA or your judgment, right? Learn that you need to adapt quickly, as soon as possible. That's the trick. You need to adapt as soon as possible. That's the only thing that you need to do. Action, reaction. So the market is acting. This is real time. This is real time. This is happening now, right? Even if I go to smaller time frame, 90 minutes, this is happening today. This is now. This is real time. This is your data, right? You follow that data. End of story. You do nothing without it. And say, okay, this is what I see now. What do I see? Let's use this example, right? I know on the larger time frame, we're going down. Reminder. Okay, what do I see? I see a low high, a low low, and then all of a sudden we see a movement, right? And so, okay, all the lows now are pushing higher, and the highs are trying to push higher. I got this high that broke the previous high, and you're like, uh-oh, something's going on here, right? Put the little triangle sign here, and you're like, okay, something's going on. Something's up. Something's up. What else do you see? Big wicks from below, okay? I think someone is trying to stop that fall, okay? That someone is trying to stop that fall. Someone is pushing money here and trying to stop AVAX falling. So if you see all these lows getting higher and higher, and that is trying to create new highs as well, this is a sign, a possible sign that we have a possible reversal. And how do you treat this? I mean, what's next? Well, I have my line here, and I say I treat this as a support, right? It came down, hit the support, went a little bit below, trying to come up. It broke the previous highs, right? That was a high, a new high, came down, trying to stay above. It did not manage. It broke again my low. Big, huge push to the up, and then we are above this line again. And then again, it's trying to push higher. And you're like, okay, something's going on here. I can see it, okay? So technically, by the school, right, what are we having? We're having the break of trend, don't we? There we are. So what do we have? We have the break of the downtrend. So AVAX is like waving your hand. It's waving their hand. Hey, I'm changing here. Something's going on here. So this is how you see it. That's okay. I say this is support. It's breaking the trend. It's not so strong to carry on. But anyway, you can see that as a retest. Goes up, comes down, it's going to retest. And then what you want to see, you need to see the break of structure. Going a little bit into combination with that smart money concept that you need to break the structure. I call it market structure, not smart money concept. It's MS, which is market structure. I follow the highs and the lows, right? So this is a high, a low high, blah, 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 low high, and then I see a break of structure. Something's going on here. It was a little weak sign, and then it followed go lower, and then it broke that structure, right? It broke a little bit the higher structure, but it fell. It did not stay above, so it was a fake out. And it came down. Instead of that, it came down, it broke the lower structure, retest the lower structure, and carry on being that way. Now again, it broke that structure, so we're going sideways. From downtrend, we're going sideways. Now I know that in school, we say that the market moves in three directions, right? Either it's going to go up, or it's going to go down, or it's going to go lower, right? Or sideways. I don't see it exactly that way. I see the market move in two directions. It doesn't make a big difference, but let me show you what I see, how I see things. When price action is going higher, then it can consolidate. That is a pause to me. I see that as one, right? One direction. It goes up and then it goes sideways. The price does not change. It started from 27, it went up to 50, and then it stayed at 50. So to me, it's a one direction, okay? The second direction will be when it's going to break the consolidation, the sideways, and then turn down. I said, okay, that was going up. Here, sideways action, it means no change of the price. So the price did not change. That was 50, 50, 50, 50, 50, and then it dropped. So from the point that it drops, from this point here, that start dropping, this is the time I see as a second direction, right? So that's the first direction, and that's my second direction. You can have a continuation. Goes up, consolidation, and then continuation. What's that? One direction. It just went up, pause a little bit, and then went further up. So I see these, right? Let me do a nice linear draw. This is one direction, higher, higher. It just paused a little bit, okay? So I don't see these as an event of me to panic. I see this event, I say, shall I take some profits? Consolidation, to me, a level, I go level by level, I go horizontals, I love horizontals. My strategy is based on the horizontals. So when I hit the horizontal level, this is the time for me to take action. My horizontal levels is a moment that I need to make a decision. Shall I take profits? Shall I add? Shall I close a trade? I'll wait, I'll do something. Okay? So if I zoom out a little bit, and here's my weekly, let me clear this text. Here's my weekly overview of AVAX. Right? Here it is. Here are my levels. Okay? Now if I go to even 2 days or 3 days to have a little bit more price action, more resolution to the picture, you just zoom in a little bit. You have a high quality picture and you zoom in a little bit. This is what you're doing with the time frames. You can see that, price action here found some resistance. Then finally broke above. It broke my other level. It did not sustain. It did not maintain it. It lost it. It came back and hit that as a support. So this level is a key level. Why? Resistance and support. And if you go to the left, you see the same thing here, right? Support, resistance. It did not maintain that level. It lost it, right? And then after that, it was always resistance, right? And where we are now, support. And the question is, this is a decision level time. What are we going to do here with AVAX? Well, AVAX has to prove to me that it can maintain that level, that 25.8, right, or 26. I need to make sure that AVAX stays here, right? If I lose it, guess what? I'm going to open a short trade. That's simple. It's so simple. I'm reacting to the chart. If it's going to lose that level, it's going down. Where? Maybe all the way down here. Can I break down this level even further to see something in between? Because you see a local support here. Of course you can. I'll show you the tricks how I do things, but I'll just give you the plan. And I say, okay, here it is. Let me zoom down a little bit. Let's go to 12 hours and have a look here what happened in the past, when I break down these levels. That's okay. This is my level. I break down my level. Let me make it a bit more accurate, more precise. The more the price, the more better. You can add the numbers manually. So here we are, roughly. So if I zoom in a little bit and investigate, how price action is reacting to these levels, right? And I'm like, okay, right? Then, that's why my horizontals have a very key significance to my TA, right? So if that, if in history price action reacted to these levels, then it means if and when AVAX is going to lose that support, that green line, then I know that I can target that level, I can target that level, I can target that level, and I go level by level. I start my level, my trade from here, and my next decision time is this level. And if I go to the left, it will tell me exactly the price, 23.7, right? So when the price is going to come down, it's going to go 23.7. I say, okay, how much is this? 8%. Okay, 8%. How much do I want to have a daily target? You need to have down a daily target. You need to know how much you need to trade per day. Maybe your daily target is, 10%, let's say. Maybe it's 5%. Okay. If that move is 8%, right? It's a very tiny area for me to go. For AVAX, 8% is nothing. Maybe it's going to take a day, maybe it's going to take 2 days. Okay, so if that is 8%, what can be my leverage? My leverage can be 3. It can be 5, right? So if I do 5x on an 8% move, how much that's going to be? Above 40%, right? So if I stay in this trade for a couple days, 1 to 2 days, for 2 days, and I do on a 5x, which is a low risk leverage, then I gain 40% in 2 days. And if my daily target is 10%, in 2 days, I double exceed my daily targets. In 2 days, I should have 10 plus 10, right? Each day. And in 2 days, I got 40. So I'm way above my target. All I need is one trade, level to level, low leverage, and maybe I'm going to stay 1 or 2 days. It's fine. And the condition, all it needs, AVAX needs to show me that it's going to lose it. If you lose it, I'm going short. Simple. I don't need to target all the way down to the red line or all the way down to the green line. It may go, it may not go. I want to be safe. Can I go at least to the first level? I can. I have my reasons why. I have a huge imbalance here, right? So if it's going to lose it, I know that it needs to fill the imbalance. So at least my security, my minimum, at least is going to be 705, sorry. Right? At least. So I measure the percentage move is 8. I do a 5x, and then I get 40% profit. Now it's going to take 1 day, 2 days, couple hours. I don't know. I mean, look at that move. It can be done in 2 days. And that is a 1 day because this is a 12-hour time frame. So these 2 candles is 24 hours. It can be done in 2 hours, in a couple hours, 2 days, 1 day, you don't know. The sooner, the better. I'm not going to complain, right? The sooner, the better. Yep. So the sooner, the better. So you see, I don't want to go overdo it with high leverage and big gaps and big levels and big distances. What I want to do is I want to make sure that I follow the market. If the market wants to drop and go lower, fine. Can I do a plan the other way around? We made a plan to the downside. What if it wants to go higher? Can I make a plan? That's okay. Let me divide that area into smaller sections to make things easier, right? Let me bring that to the left so you can compare yourself. You see the chart and how the chart is reacting to these levels. So you're like, okay, I see that, the price action is respecting these levels. So what will be the strategy? The strategy will be if AVAX breaks above 28 and gives me an idea that it's going to be a support, right? Claims that 28, stays above, right? If you give me that evidence, then what I'm going to do is I'm going to go long from here to there and maybe here. Why? Because I do know this is a previous high. So on the next move, which level is going to target? The previous high. Either it's going to meet the same high, equal high, or it's going to come break it and give me a higher high, right? That's a high, that's a high high. So maybe on the next move, it's going to give me a high high. But at least, can I bet, so to say, because you are betting against possibilities and probabilities. If I start long here, can I go at least to these levels, which I know is safe? And what's the measurement? What's the distance? From here to there, it's 15%. What's my daily target? 10. You can even do that with 1x, but it's not going to be fun, right? So you're going to do some leverage, okay? Use 3x, use 5x, why not? 5x is fine. If you do that 5x, it's 75% profit. 75 with 5x, right? From here to there. AVAX may continue, right? But also, what I see, I know that I have an order block there. A short order block, a sell order block. Why? Because I had the momentum to the downside when you reach this level. So I do know, also from my experience, that when I'm going to reach these levels, we're going to hit in some trouble area. So instead of me trying to be arrogant and be greedy and still believe that it's going to go to the sky and meet the stars, I say, hey, let me book my profits here. Right? Because it may want to come down later and then maybe it's going to push later to the higher points. Why do I want to lose that profit? Okay, as in time. Remember, you don't want to be overexposed in time unless you're an investor. If you're an investor, you want to have different time frames. You want to go in, I don't know, on the monthly time frame and when you enter into the very bottom of the market and then decide to get out 2 years later, which is going to be the top of the market, the end of the bull market. That is an investor. But if you're a trader, okay, Mustafa is asking, is this a gun box? Yep. This is the gun box theory. You probably heard it from Luba. Luba is very fanatic with my gun box. Back in the day, I was using the gun box, but because I ran out of lines, I'm using the fib with custom numbers, which is, the same thing. More levels, more easy for me to do it. I'll show you the trick how you do it with the Fibonacci. So yeah, before I hit the trouble areas, I want to exit, grab my profit. So I'm going to do from here to there, right? Not from there on the very bottom, from here, right? Make sure that you get evidence that it breaks this level, stays above as a support, and then if it moves, you grab that. You grab that entry, 2 lines above, and you exit here before it hits that order block. 2 things can happen here. Either it's going to fall down or either it's going to continue. Right? If it continues, fine. If it falls down, you don't want to lose the time that you waited from here to there. You don't want to lose your profit. Book the profit, take the money, and then find another trade. Okay? This is how I trade. I go level by level, day by day. Every morning, I see, how Tuesday, let's say today is Tuesday, I would like to see where Tuesday is starting compared to yesterday. Right, and I would like to see, what price action is doing. I'm like, I'm watching Bitcoin here. Let's say, for instance, let's go to the 1 hour and like, okay, what is Bitcoin doing? Oh, it's dropping. Okay, for instance, it's dropping and it broke my 50% of my range. I say, okay, that's weakness. We're heading towards the downside. Okay, so how far Bitcoin will go? It has a good, let's say, reason to hit these levels again. 64, right? It has very good reasons why, and even 62.5. I'm not saying it's going to go all the way down there, but let's do that little trick. Let's break down my range and see level by level. Right, level by level. Here it is. And let me zoom in a little bit. Let me go to 15 minutes. Don't be afraid, and see how price action is reacting to these levels that we just draw, right? Support, 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 resistance. That green line was a huge resistance. Why? Because it's the 50% of the range. And then it flipped it. It managed to break it and stay above. Nice, right? It tried multiple times to break it. No, Bitcoin was very strong back then. And it said, no, resisting, we're not going down. Even that it tried to go a little bit lower, look at these huge wicks. What does it mean? Someone is pushing. Someone is pushing here, big time. So you see, big candles on the upside. And then support. Recently, when that happened Monday afternoon, my local time. Right, that was after the US Open. Where's the US Open? US Open is around this area. So yesterday, when the American US opened the markets, they dumped it. It started moving to the downside. I don't know why. They're not happy. They decided to sell. Right. Okay, fine. You don't care. You don't want to wait for the news. Why is dumping? I don't care. Did someone say anything? I don't care. Did Elon Musk? I don't care. Did Trump? I don't care. I don't care. What I care is which direction the chart is going. Right? Are you going down? I'm following you. Simple as that. You just, it's like it's like the elevator. It's going up, you're going up. You just need to jump into the elevator. Right? It's not point for you sitting outside the elevator and you're just watching the doors going open and closing, right? You just need to jump into the elevator and go with it. You want to go down? Let's go down, right? You lost that level by 50%. I said, okay, we lose that, we're going down. First level, second level. Now it's trying to react, but it's not so strong. It cannot hit again the 50%. So I'm watching, right? I'm watching this area. And, to be truthful to you, let me go back to the war room and let me go to my channel here that I have on the war room. Right. I did a warning on Sunday afternoon, right? It was, what's up? Okay. So Sunday afternoon, right, my local time, I did say a heads up, right? A bearish divergence. Ladies and gentlemen, good evening. I would like to give you a heads up, not a panic, not a FOMO, not a fad, a heads up. On Bitcoin, on the daily, I see a bearish divergence. What does it mean? It means that I see that it wants to go down. How we treat it? Simple. It's Sunday and we are heading to the weekly closing. It means, every Sunday we close the whole week, right? So please pay attention how the Asian market will move. There is a chance that we're going to break the 67,358 and head to the range of 63-ish area, okay? I'll explain why I say that. I say, why is this? Well, that is because technically we have a high on the price action. It means the chart was going higher, but on the stochastic RSI, on the indicator, the highs were getting lower, right? So I had a lower high on the stochastic RSI. So in these cases, indicators, we know that they are lagging indicators, means they're a little bit behind on price action. Price action is real time. Indicators are lagging indicators, like lagging information, a little bit behind. However, when you're trying to compare both of them with the highs and the lows, the indicator, unfortunately, it has a priority this time. Why? Because technically it's showing you an anomaly in the market, like a trouble waters, so to say, right? So let me go to the daily and let me explain what I saw. So here's your price action. Let's make things a bit bigger. Let me cut down the breakout. Here we are. So let me cut that down off. Here we are. So what do we have here? We have all these highs getting higher, right? So high. However, if I bring my indicators, the stochastic RSI was doing the opposite, right? The highs of the indicator were getting lower. This is a high, that's a low high, right? So when these two indicators doing the opposite, it's a sign. It's like a warning, watch out. Something is not right. So the indicator, the stochastic RSI, was giving me a warning of anomaly. Something is not right with the market. It is not, let's say, healthy or solid, right? That is trying to push to the higher level. Price action is trying to go higher, but it's not being backed up, right? Stochastic RSI was heading down, and that is opposite directions, and that is a bearish divergence. Price action is trying to push higher, but the indicator is telling you otherwise, that we're pushing things down. So if I go to the 12 hours, it's more easier to see. All right, look at that. All these highs are getting lower. A high, low, high, low, high. What do you have in the price action? High, 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 high. And what do you have? A dump. Right? It's not fully extended, but a lot of people were still going long. Right? They were holding this level as a support, and they were hoping that it's going to go higher. And I said, we're going to lose that mid-range. What was the number that I told them? Let me put the range here. Let me put the numbers up for you. I said 67,372, right? Let's go to Discord. Sorry, that's WhatsApp. Discord, here we are. What did I say? I say that we may lose 67,358, right? And we may target 63. So let me go back to the chart. Where are we now? 66. Where is 63? Right? 63 is the bottom of the range. Right? This is the maximum, let's say the big target that we may see. We may. Right? But I take things level by level. Let me maximize that. I take things level by level, one by one. So let me bring back again the division of the range, right? The breakdown, so to say. Let's go to a smaller time frame. Even 3 hours is fine. So the 67,363, it's the middle line, right? The 50%, the red line. And I saw that we're going to lose that from here. That was Sunday afternoon, around here. 8 o'clock, 6 o'clock. Around this time, It was the time of my post. And I said, guys, I see divergence. And I had a lot of people say, no, we're bullish, we're going up. And they saw that, but they didn't see what was coming. Right? So that was a little bit of a bull trap. What's a bull trap? A bull trap is when the market is giving you an idea that it wants to go higher, so you are bullish, and it's a trap. Why? Because as it goes up, then it drops, right? And that is a bull trap. All the bullish traders got trapped going higher, and then it decided to dump. Okay, so this is what I saw yesterday, or on Sunday, not yesterday, the day before yesterday. And I said, be careful. I see divergence. We may see a drop. We may break the 50%, which is the 67.3. And this is what happened. What's the next level? Look at that. It bounced here. Okay, it bounced here. But so far, I like to read the bodies. I don't see any strong movement or continuation to go above the red line as yet. Okay, I see a big momentum, negative momentum to go down. We lost the 50%. It bounced as a support on this level. What level that is? That is, let me see the numbers, 66.258, right? 66.3, so to say, roughly. But I do not see big bodies, right? I see a little bit of weakness here. That is a little bit panicking state, right? Not for me, it's for the market. They don't know what to do, right? All these people that were bullish, they're trying to go higher, and then they see all this dump, and they're like, oh, what do I do now? They don't know. They don't know. It's simple, they don't know. Now, what I do, and what I would like for you to understand, right? I'm just giving you the approach of what I teach in the web room, is like go level by level, right? Treat this, as a support. Right? You're not open on the trade? Fine. Let's say that you are trying to find a trade. Okay. Now you're in the middle of nowhere. You are between two lines. It is not a good time for you to trade. You have your lines here, these two lines, and you need to have the conditions. You break this, we're going down. You break this, we're going up. That's simple. You're reacting to the market. If the market wants to go lower, be my guest. I'm going with you. You want to go up? I'm jumping the bus and I'm going up with the bus, the elevator, whichever you like to say it. So use these lines as the elevator levels, right? And it wants to go up to this level, and then when it's going to be up here, then maybe it wants to come down to this level, right? Use it as an elevator. You want to use the bus analogy? I used to have the bus. This is your bus stop. This is your bus stop. This is your bus stop, and you just hop on and off from each bus stop. Okay, these are very, very simple rules that I have, very simple conditions, and it's way, way faster instead of me doing smart money concept. Smart money concept, believe it or not, it requires a lot of time for you to do the TA, and I don't want to do that. Why I don't want to do that? Because I'm lazy? Of course not, I'm not lazy. Let me show you my list. This is my Bybit list. And I have to go through all of them. Every single one of them. How many are they? 365. I got another list, which is Bitgate, 224. I got MEXC, 235. I got my AI, 11. I got my Binance, 150. I got AI Spot, 32. I got my Focus, which is 26. I got my portfolio, 68. I got my True Utility, 30, right? I got loads of watch lists and lots of charts. I need to go as fast as possible. And how I do that? I click on the 12 hours. I bring my indicators, which is my stochastic RSI and RSI. And on the top of that, I have like the cherry on the cake. I have ASO or DMI, whichever you like, but best. I got volume data, just not part of my strategies, not part of my conditions. It's just for me to see a better view. I'm doing, let's say, a review of the volume data because it's a new indicator that was added into TradingView. It's called volume data. Right, so if you go to indicators and you say volume delta. You see, volume delta, it's not even a star here, here it is, volume delta new, right? So it's a new indicator on TradingView. You're more than welcome to use it. It's a little bit better indicator than volume. It's supposed to be volume, right? But what's the delta? What's the difference with the delta? I'll tell you what it is. Volume, what it does, well, let me bring volume as well. Let me bring volume, the normal volume that everybody knows, that little red and green bars, right? So what does it represent? It represents, each bar represents the buyers plus the sellers, right? So if you have 1 million buyers and then you have 1 million sellers, right? You get a big bar equal to 2 million, right? So that bar, that size, it tells you in total the buyers and the sellers. The color is telling you, like the red is negative, right? That the sellers won the buyers. So the sellers were more from their buyers, but it doesn't tell you by how much. So what was the ratio? Was it like 49 for the buyers and 51% for the sellers? Was it 60, let me put 40 here. Was it 40 for the buyers and 60 for the sellers? Or was it, I don't know, 20 for the buyers or 80 for the sellers? You don't know. But all these numbers will give you a red candle, a red bar. The size, the height of the bar is because of the buyers and the sellers together. So it wasn't a really helpful indicator for me. Yes, it will help you to understand if you have a fake out move. It means, you have a big, huge move, but there's no volume. That is for the newbies. That's for the people to learn when to spot out a fake out. But I don't use it anymore as a volume. I use the delta. And what's the difference here? What it does is telling you that it takes the buyers minus the sellers, so it's giving you the difference. Remember that I said to you that I need to know the difference by how much somebody won? Was it the buyer that won or the seller that won, and by how much? So I got it with volume delta. Now I can see what's going on. When I got a huge gray bar, it's telling me that, the sellers won. And if there's a small bar, but little. If it's a big bar or medium bar, I understand by how much, the pressure. Look at that huge yellow candle, which is a green candle, right? That was the buyers destroyed all the sellers, big time, and it pushed the whole thing up, right? After that, the sellers were trying to push things down, right? And then you have the buyers won, they push the price up. You have a seller, someone was pressuring, and here's the doji. And then the buyers again, they're trying to push up. And then you have that huge gray. The gray, it was that huge dump. The last one, the yellow one, is trying to push up a little bit. This is the reaction that is trying to, stop, let's say, the down move, right? I don't know if it's going to be strong enough, but, it's trying to stop that momentum. So now with the delta, I can see what's going on, how much the buyers and the sellers are, compete with each other, right? I don't use it with my strategy. It's just an observation. I'm doing a review to see how Delta is performing, how I can use it, how it can help me. So it's still under investigation. But Delta was good. But the majority of the indicators that I'm using is the RSI and stochastic RSI. These two guys are the guys that I'm using in my strategy. So what I usually do, I go to 12 hours, see a little bit the price action, what it does, right? And then I say, okay, I've got a cross down, it's going down, RSI is going down. What do I have? A downtrend. Simple. 10 seconds. That's what it took. Right, I go to the next one. What do I see here? A cross up, you're pushing up. RSI, not so strong. Okay, this is sideways action. This is not very strong. I need to do something different. But it took me 10 seconds for me to understand where I'm starting. Right, very quick. If I want to pay a little bit of attention into it, I said, okay, Can I break a level? Can I have something when we go to the monthly? Can I use my, let's go back to weekly. I mean, weekly is much better. So can I use that weekly candle and break it down into sections? That's what I do, really. I break it down to sections. Let me put it to the left. Let me put that to the right. Here's my price action. I'm going to lock it so it doesn't move. Go back to 1 hour, 90 minutes and have a look what's going on. Here's your levels. Right, and you say, okay, what do I see? I see weakness on the 50. Right, that's my 50% of the range, or the weekly range. I use a weekly range. That was the bottom of the week, that was the top of the week, so I'm using these levels. What I see, double top, weakness, it cannot reach even the 50, it's going down, baby. Right, it lost that level, still going down. If we lose that, it's going to go down. For me to start thinking positive about this trade, about this price action, I need to see it claim this level and then start heading up. And then I know that it's going to head up to a trouble. The 50% is going to be a trouble. So if I'm going to bet from here to there, it's going to be only 1 or 2 levels. That's it. Maximum. Why? Weakness. 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 You never know. So I'm going to bet from here to there, at least. Guarantee. And then I will wait for the price action to give me something better. Right? We need movement. We don't need sideways action. We need a trend. Right? It's no point you wasting your time for little moves. Go up and go down, go up, go down, go up, and technically you're doing sideways. No, you need big move, right? That's why we're in crypto. So is this one a good one for you to like on the 12 hour and compare with stochastic RSI? No, not yet. It's not strong. It's not strong. RSI doesn't go up, go sideways. Stochastic RSI is trying to push up, but no, price action doesn't give you anything. Okay, fine. Next, spacebar. I don't like this. Spacebar. Spacebar. Oh, cross down. RSI, yeah, neutral. No, next. Right? Cross down, RSI trying to push up. ASO, yeah, he doesn't know what he wants to do. He's an uptrend, but, stochastic RSI is on a downtrend. So, okay. Possible area for me to target that area. So let it come down to this level and then I'll come back later. Next. You see? No market structure. No smart money concept. No, nothing. I'm using price action, indicators, and a big time frame. Is this ready? No, it's not ready. Next. Is this ready? Yeah, no. Next. Right? You just move. Move. Right? You need to react to something that is moving. Right? Simple like that. Yeah, no. Can go to the daily. Right? I like to see weekly. On when I'm trying to see when things are really gonna move, really gonna move, catch a trend, is I like to see the weekly. Why? Look at that. When you have a cross up and RSI turning up, right, and ASO the negative is losing it, that's a sign for you to go up, right? And now you had, look at that, price action was coming down, giving you a high low, trying to push a high, but you had a huge divergence. What did it tell me? It told me this is not good. Do not bet for higher. It's done. Let it come down, let it reset. I said, okay. And what do I treat? How I see these levels? Goes up, comes down, bounce, comes up, down, bounce. It's going to come like this. And then I see a support. When I hit the support and be stabilized and consolidate on support, then I will grab my entry. If it's going to lose it, I'm going to flip. You lose it, you're heading down here, boy. This is how I see the charge. Nice and easy. Right? Only takes 10 seconds. Flocky, no good now. Go to another one, No good, no strong moves, right? RSI, sideways, stochastic RSI, trying to push, losing a little bit of momentum, price action. All the highs are getting lower and lower. Okay, maybe we're going to see it coming down to the support again. Right? Maybe it's going to come back to support. Where's the support? Here's the support. Let me move that a little bit further down. Here's the support. Right, so when it's going to come back next to my blue line, I'll think about it. Right, Pepper. I had multiple lines here. It's been a long time for me to let me update that. Let's go to 200, sir. Here we are. Okay, that's a Fibonacci level. Yeah, it's extension. That's a very old Fibonacci. So let me go to the monthly. Let me break down my levels. And I see that huge candle. Let me break that down. From the top to the bottom, double click. What I do is move to the left, move to the right without losing my points. That's why I'm using, I'm not using my mouse. I'm using the cursors here. Right, I'm gonna lock it, put the padlock so it doesn't move, stays there. Go down to smaller time frame, 12 hours. What do you see? Support on the 50. Nice. Hello, Pepe. I see you. Right, I see you that you're trying to stay on the 50% of the range. To me, is significant. Okay, you have my attention. Okay, go to the daily a little bit. Let's have a look at the stochastic RSI is trying to get to the bottom. In which area? On the oversold area, right? Okay. What I'm gonna wait? I'll wait for a couple of days until I get a cross up. When I get a cross up on the stochastic RSI and RSI is gonna turn around, Pepe will move. Now it's trying to get flat on the support, so I'm waiting. Go to 12 hours. 12 hours, yeah. Stochastic RSI going sideways. RSI dropping a little bit. Okay, still weak. It's still weak. So what do you see? Right? Consolidation. A descending triangle is going to squeeze. And what happens after the big squeeze? Boom. Right? It's going to explode. We're going to get a compression. It's like the engine, right? The combustion engine is compression. And then what you need? An ignition. And when you get an ignition, you're going to have an explosion. And then you have what? Expansion. It's going to expand. You don't know which way it's going to expand though, right? You cannot. Remember, it's a random walk. You don't know which way it's going to go. You go based on your probabilities. And you say, hey, I see you that you're trying to treat this as a support. So what are the chances of breaking the support? Minimum, right? I say 70% I have higher chances go higher and 30% going lower. What are my higher probabilities here? Go higher. Okay, I see you. You came from a lower level, came up, you treated that as a resistance, you broke that resistance, you came out to support, so there's a high chance that you're going to continue. If Bitcoin behaves and Ethereum behaves, then Pepe will follow. Why Pepe follows Ethereum? Because Pepe is on the Ethereum network. If Ethereum is going to be solid and blossom, that will go higher. If Ethereum is going to dump, then that will go lower. It cannot do opposite, right? It has to follow the leader. So Pepe is on the Ethereum network. It has to follow the leader. If Bitcoin drops, then Ethereum has to follow Bitcoin. Why? Because Bitcoin is the leader. Is the king or the queen, which way you see it, right? So on the daily, if I want to day trade and see some trade in the day, I look at 12 hours. If I want to do big trades like stay in for a couple of days or even a week or two, I use the weekly, right? Just to answer you the questions, because I've seen some questions over there. How I approach things. It depends the mood. Do you have the time for you to stay on the chart on the front of the screen and trade? If you do, then you can use the 12 hours and have a look what's going on. If you don't have a lot of time and you just wait for the right time for you to trade and stay in the trade for a couple of days with low leverage for you to survive any volatility, you use a weekly, right? That's what I do. So Pepe, I see that Pepe is treating this area as a support, right? It was going on a down move. You need to zoom out sometimes and you can see, the direction. It was dropping, and then a push. It broke the 50% of a range is a significant level, 50%. So that was resistance. It managed to break above. It did not maintain. It lost it. And now it came back and said, no, I'm strong. I'm holding it. And you're like, okay, I see you, Pepe. You had a big problem here. Now you seem like you solved that problem. So now the question is, are you strong to stay here, or are you going to drop it? And that is, again, has to do with Bitcoin. Now, if you go to the daily, here's your little, let's say, your little agent with your inside information, like the intelligence, right? It's telling you, let it come down and get a cross up. When you have a cross up, definitely the price action will move. Why? Because the indicator is a lagging indicator. It needs data for price action for you to give you a value. So if it's going to give you a cross up, right, that event, it means that the price action is moving higher. But if you fail to see it at the price action, why? Because maybe small candles, maybe you too zoomed in, maybe you didn't see it. It's fine. It's fine if you didn't see it. But when you have the indicators telling you, hey, we've got a cross up, something like this, RSI is heading towards the upside, you're like, okay, something's going on here. ASO, the negative, the gray line is negative, right? Remember, my color scheme is gold and silver, right? Gold is going up, silver is going down. Gold, it has a high value. So when you see the silver dropping, right, it's telling you that that's it. This is the bottom. We're going in, right? You have the indication from stochastic RSI. You have the indication from RSI is turning around, heading upwards, and then you have the ASO telling you that the negative is going down. So it's telling you this is a good time for you to go in, right? And this is what you're waiting now. Something similar. You want a cross up, you want RSI to turn around, and you want the gray to drop, right? It doesn't matter if it's going to turn around here or it's going to turn around here. Let me increase that. Turn around here or maybe turn around here. It doesn't matter. Every time that the silver turns down, it doesn't matter how high it is. I look for the event that while it's peaking, it's dropping. I see that is dropping, it's turning direction. When I see negative going downwards, that is the time for me to get in. This is how I use my strategy, and how I approach things. So I'll wait for the cross up, right, on the daily when Pepper is going to be ready. Now, you're going to have another question. What if? Or maybe let me ask that to myself, pretending that it's you. Can I have an entry now? Because I don't want to move. I don't want to lose the move. I don't want to miss the move. Yes, you can, right? But you're not going to go in crazy. You're going to go in, let's say, maybe with your 25%. Let's say that you wanted to go with $1,000, right? Let's pretend that you want to go in with $1,000. Don't put $1,000. Just put $250, right? Put your 25% there. Get a small entry, just in case that it moves in the middle of the night and you didn't miss it. At least some money is going to make some money. Right, so always trying to use your money to make more money. Right, you don't want to always chase the pump. What we say in the school: don't chase the pump. Why? Because it's too late. You need to enter before it moves. That's the trick. You need to enter to the trade before it moves. If it moves, you need to chase it, and it's not healthy. You have to be very, very, very strict when chasing. It's very, very tough game, right? It's like you're a hunter, and you try to hunt, right? So if your prey is still, this is the right time for you to take your shot, right? If you start flying away, if it's a bird or a deer or a rabbit, whatever you're hunting down, if it's not on the move, it's moving away from you. So you have to be, really, really fast and really, really accurate for you to catch it. It's the same thing. You need to get it before it moves. So, if it's gonna, flat down, and also you need to be careful with the stochastic RSI, because a lot of people make that mistake. Let me explain here. This is stochastic RSI alone. Okay. Now, when stochastic RSI is increasing, it's telling you that the momentum to the upside is picking up. Okay, so when you have a cross up, this is a good sign, like a confirmation that the price action is moving to the upside. So it's picking up. The higher it goes, the bigger the momentum. right? It's like it's picking up speed, it's picking up momentum. When it reaches the top, this is when a lot of people make the mistake and say, oh, we're reaching the top, we should start selling. No, right? Because it can stay up here for X amount of time and the price action still moves higher. So because you got a flat reaction from the stochastic RSI, let me give you an example. Let me use a smaller time frame. Go to 1 hour. You see these kind of extensions. That one here. A lot of people make the mistake that because you pass the 90 or even 80, because if you load the original stochastic RSI, you get these lines on the 80, right, and on the 20. And I've changed my lines to 90, you see here, 90 and 10, right? I enlarged the lanes, right? So instead of 80 is on 90. So what I do is a lot of people, when they see stochastic RSI passing the 80, where's the 80? Let me put an horizontal line. 80, 80, 80, 80 is around here. So let me do that a white line so you can all see. So when a lot of people, let me make it a bit brighter. Here we are. So a lot of people, when they see stochastic RSI passing above the 80, they start selling. Why? Because they believe that they are in the overbought area. True, it is, 80 and above. Mine's a bit more stricter, 90 and above. It is an overbought area, right? However, it is not the end. So when the stochastic RSI bypass the 80 and bypass the 90, right, the price action still pushes up. And I'm gonna do, let me do a vertical line exactly when it hits 100. So I'm gonna do this vertical line for you. I'll make it bright green, bright. Here we are. Now, this is a moment that stochastic RSI hit 100. The stochastic RSI cannot do 101. It stops at 100. Okay, that's it. It goes flat 100. Here it is. You cannot go any higher. But the price action does. And when the price action starts dropping, when you have a cross down from this point onwards, and I'm going to make that a bright red. So between these two lines, the green and the red, I promise you that the price actions go higher. When you have a cross down and when price action is dropping dramatically, I'm going to put two red lines. This is when the price action is going to drop. And very fast and very quickly, I'm going to switch to the price action. And here's a price action. Right, this is when stochastic RSI hit 100, and this is where everybody panics, and they do what? Let me maximize the price action. What are they doing here? They're selling. And what happened to the price action? It went higher. And what they do, these guys? They take 3 steps back, they run to the wall, and they hit the wall, the head on the wall as hard as possible. And, trying to understand why did they exit? The price action, it went higher. And they lost from here to there a big 23%. So this is where a lot of people make that mistake. So when you see that RSI hits flat 100, it is not the time for you to exit. Why? Because price action still has momentum, still building. And when you see the weakness, when you have a cross down, here's a cross down. That's a cross down. That was the highest point. Price action came down, and then the second cross down, it went even further down. So this is the time how you want to take action and say, okay, we have a cross down. I need to close that long. That long that probably started it all the way from here. I mean, let me go back to the other side. Where was the bottom? The cross up. That's a cross up. So let me put a line here as a vertical line. I'm going to make this green. Right, here's a cross up roughly. I'll make that bright green. And the yellow, I'll make that yellow to notify you that the warning, the arrow, so to say, or the the misconception that a lot of people say, oh, we hit flat, we are on the overbought area, we should exit. So that's your entry, right? So a lot of people took that entry, they took that exit, the yellow line, they took 9%, and let me clear these drawings here. That to that out, okay, nice and clean. Drawings out. What if you stayed in from the same entry all the way to the red line, the first red line, 29%? You see the difference? The first guys, now they took entry from the cross up, but when the stochastic RSI hit flat 100, they thought that is overbought, that is done. They took 9%. But when you wait for the cross down, you gained another 20% extra. So be careful with the stochastic RSI. Don't jump any conclusions. Wait for the cross to happen. Okay? So this is what I see. I see and I hunt down the crosses, the cross up and the cross down. That is flat. It's just an extension, right? It means that the stochastic RSI cannot print above 100 and that the price action is full on momentum. Okay, this is how you read the stochastic RSI. And the higher time frame, the better. Okay, less noise on the stochastic RSI. It's way better on a higher time frame, but it's going to make a bigger difference, you know, on the stochastic RSI. Do you use TP and SL areas? Yeah, I use TPs and stop losses, but not based on the stochastic RSI. I do that based on my horizontal levels that I do with my Fibonacci tool. And speaking of which, let me print out the levels of my extension. So let me use the original Gantt box that Luba is using because it's the first version, so to say. Version 1 is the 0, 0.25, 0.5, 0.75 and 1. And technically what it is quarters. You break down a range into 4 sections. So each quarter is 25%, right? So 25, 50, 75. Okay, so it's quarters. And if you want to extend that, which I did, that's why I'm using the Fibonacci, then I go to, I call it Gangster Fib, right? I call it Gangster Fib, and it's 8 lanes instead of 4. So if you look here to the right, is 8 lanes now. Okay, but don't be alarmed. It's the same beginning and ending with the 4 lines. So let me do the 4 lines for you. Here it is. Here's the starting point. This is the end point. This is quarters, right? 0, 25. So that's a 0. That's the 25. That's the 50. That's the 75. And this is 100 quarters. 1, 2, 3, 4. 4 lanes. Okay. But sometimes if the lanes are too wide, you can do this with 2 approaches. One approach is to create in between. You break each lane into half. So let's pretend this is half of that lane, another half is going to be around here, another half is going to be around here, another half is going to be around here. But instead of doing this by eye, what I've done is I've created a template and it's on 8 lanes. And you see my blue lines is roughly approximately on the half of these lanes. And what are the numbers? It's a division, right? Between 0 and 0.25 is the 0.125, right? The distance between 0.25 and 0.5 is the 3.75, right? And the half between 0.5 and 0.75 is the 0.625. So it's an equal separation of the quarters. So now we've got eighths, okay? And then because, I was experimenting, I said, okay, what if I want to project and see what's going to happen in the future right? When that pepper is going to break that all-time high, where it can we go higher? Where do I expect the next levels? So what I've done is I created extensions. So here we are, I've got extensions 2. I've created a future levels, the same levels with just a number 1 at the front instead of 0, right? A 1 all the way to 2, same levels. And now I can project that maybe in the future this is the levels where when you have a let's say a token that's doing a price discovery, has never been that high before, and you don't know whereabouts it's going to find some resistance, that setting may give you a good a level of I mean, let me use something older. Let me go back and let me go to weekly. Let me go into that little weekly candle here. Even that one, or even that one, doesn't matter. I'll use that weekly candle here. So here's a weekly candle, right? I'm going to reverse that because I want the lines above, and coordinates, I'm going to make that to 200. Okay. So let's pretend you're back in time and you have all this price action down here, but when a pepper is going to break the all-time high, right, that gray line, that gray top, so to say, that green line, you don't know where you're going to expect, the next support resistance to be, right? So let me break this down. Let me lock it, make sure it doesn't move. Now I'll move away from the weekly, and we're going to see that huge candle to see if that was reacting to all these levels. So let me go down to 12 hours. Let's see that nice pump to the upside. Let me go even to 3 hours and see, is these levels, reacting with a price action? Is this price action will be any help on my yellow lines? That is my extension. All right. So we broke up all the green, what was the highest ever. And then we have these levels for me to play around. Right. So I'll do that again. I'll move that away. Let's go back to weekly. I'm going to use another candle. I'm going to use that big candle. I'm going to break that level again, all the way up there to the top. Let's put that to 200, all the way to 200 to the right. Boom, it goes. Let me lock it and make sure that it doesn't move. Let me show one click, not a double click. Padlock is locked. Move that to 1 hour, and let's see if these price action in the past, while it was moving, right, did it help at all? It broke the green line. It was way below, right? It was way below. It broke the green line, and the yellow are extensions. And have a look on the 1 hour. Does these levels help you out with a price action? All right, you see a huge support here. You had resistance, rejections, right? Rejection these levels, rejection here, rejection here, right? Support here as a rejection levels. Look at that. So, in a way, you can use that tool and that strategy for you to target the future levels. And why is that important? Because the most difficult part for every trader is two things, right? First thing, the first step that you need to do is to enter into the market, right? You need to enter. That's the first difficult thing. The next difficult thing, which is the most important from the first one, they don't know when to exit. They don't know where to put the TP. They don't know when is enough. They don't know what's the next resistance. And that tool will help you for you to which is an exit with an E again, but let's put an X there. Let's put an N here. So that's your entry and that's your exit. That's the two typical, let's say, concepts for every trader: when to get into the trade and when to get out from the trade. If you know these two, you're gonna be very, very good with trading, because you know when to enter and you know where to get out. Okay. So here we are. So I don't want to overdo it. I don't want to burn you out. Let me see if we have any questions. Have I missed anything? Let me have a look. Is it realistic to gain 50k starting with 1k in a month on leverage? It's not realistic for 1k and target the 50k, but with 1k, if you can target, $500, yeah, you can, which is half of it. And then you keep on adding, you increase your capital. Yes, not in one go, but to increase it, that's the point. Slowly, you need to know your numbers, right? Liquidation, fair value gap. Yeah, the fair value gap, okay, it's an imbalance. Fair value gap, it can be seen only, this is another concept that I say always. You can have a fair value gap only right next to the order block, right? This is my condition. For you to find a fair value gap, it has to touch an order block. If you have a gap that is not on the order block, we call that imbalance. So fair value gap is an imbalance, yes, but imbalance doesn't mean always that it's a fair value gap. Why? Because imbalance can be everywhere. Fair value gap only is next to the order block. Similar, not the same. So liquidated twice. Okay, we all experience liquidations. We all do. That's not the problem, right? The problem is not the liquidation. We're all going to experience that. The problem is you keep on experiencing that, right? We need to stop that. And that's why you need to know, that's why you need to be very quick reacting to the charts. If it's going down, flip, you're going down. If it goes up, you flip, it goes up. Simple. The trick is for you never to experience again a liquidation. The trick is for you to make sure that you adapt to the conditions of the market as soon as possible. Okay. Fibonacci, yeah, my levels are Fibonacci levels. More easy for me to use a gun box. Gun box is very limited. Let me show you. I had a gun box here, so let me bring the gun box. Here's the gun box, right? Once you click the gun box, it only gives you 1, 2, 3, 4, 5, 6, 7 boxes for you to enter your values, right? But if you do Fibonacci, you have more levels to play with. Look at that, how many boxes you can put levels. That's the only reason why I shifted to Fibonacci, okay? But it's called the gun box method because that was the first tool that I used. Everybody loved the name Gunbox, so we still call it a Gunbox. But for me to be fair, I always create names. I call it the gangster fib, right? Because it's not the real fib, it's the gangster fib, it's the mafia fib. It's giving you the same level with the Gunbox. Same levels, but more levels for you to play with. Okay, the time frames. We spoke about the time frames. Can you solve the settings for the Gunbox? Yep. Gunbox or Fib? It's the same levels. Technically, what it is, guys. Let me bring all the levels up. Here we are. Let me bring up the signs. I'm gonna do a screenshot, and I'm gonna post the table. This is with the extensions. I'm gonna post it for you in the chat. So save that picture. I think you're allowed to download it. So download it, keep it, and then adjust your settings. And also, you do that with a template, right? Use templates. I love templates. It saves me a lot of time. Look at how many Fibonacci settings I have. I have a true Fibonacci, microstructure Fibonacci. Here's my structure, microstructure, which is golden zones and stuff like that, what we learned from the school. Plus the extensions, both sides, right? Still works. Don't get me wrong. It still does work. I mean, look at that. I mean, let me do this here. Let's pretend that I want to measure that drop, okay? So top to the bottom, or the other way around, right? When people see it's going up, where do you expect the golden zone to be, right? So let me do that. Let me extend that to 200, whatever that is. Boom, to the right. So, right, here is the up move, the impulse to the up. And then people are, going down and say, oh, we're waiting for the golden zone, right? Look what happened. Now, but if you hold these lines, right? Look at that. No, not you, wrong tool. That one. So you see, support and resistance. That was support, that was resistance. Same levels. Go further to the right. What do you see here, right? Resistance on the same levels, right? And then, look at that. Look at that, look at that, look at that, look at that, look at that. These levels do work, right? In the future as well, look at that. The green lines are extensions. Look at that. Boom, 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 right? Support, came down, support, resistance, 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 comes down, support, and lost it. It came 2 levels down, goes up again, goes up again, goes up again. And even if I extend that even further to the right, let me go to 300, please. 400. Further to the right. Look at that. It still acted as a support. And remember, we drove that Fibonacci all the way to the very, very beginning. To these levels, to this impulse, right? From this very bottom to this very top. That was the beginning and the end of the Fibonacci. But if you hold it and observe, you're going to see that it's working. That's why I'm very, very fond of the horizontal levels instead of the diagonals, right? So you need to use a strategy, a tool that makes sense. To me, it's my Gantt box or the Gaxta with the predefined fixed levels, right? It's just equal levels, equal distances. If you love the Fibonacci and the golden zones, fine, you're more than welcome to use it, right? Nothing wrong with it. I love Fibonacci, but I love more my Gaxta Fib, okay? I love the horizontals. So even with, Fibonacci, I mean, look at that. You're supposed to start from here and went all the way down to the bottom. Let me do that to 400 again. Here we are. So what do you see? All right. It came all the way down. We measure the down move. We're trying to push up, and we have trouble on the 50. Right? Trouble on the 50, and we are between 38 and 50. Okay? So technically, Pepe has to... Is that Pepe? Yes, still we are Pepe. Pepe has still to prove what he wants to do. It's going to stay above 38 and break the 50 and go higher. This is the levels on the Fibonacci. Right? If it's going to break the 38 and go lower, that's the level. And if it wants to dare go even lower, let it be. What if I take that Fibonacci based on that impulse and put it back to minus 500 or the far left? Do you want to see how, even further to the left, please? Minus 1,000, I don't care. Go. So, look, even with a different area, a different range, like you draw your Fibonacci, you can see that, Fibonacci is giving you an idea, a starting point and an end point from where to start, for where to end, a level to level, right? So we measure from here to there, we're looking right, but if you look to the left, you see that these levels, are being respected, even on the Fibonacci, Look at these wicks, right? So these tools are not, they are serious tools. It's how you use them. Okay, you need to be careful how you're going to use these levels. Right. Okay, that's it for today, I believe. I don't want to burn you out. I just wanted to give you an understanding how easy you can do your TA. You don't need to overcomplicate it. You just need one strategy. You need to understand it. You need to learn that strategy, believe that strategy, and then it's down to you. It's down to you how you can be strict with your conditions, how your eye is easy to see things on the chart. Use the indicators as a help, your inside information, and take things as simple as possible, right? Don't over complicate it. Don't try to be over technical. This is not, let me say this in a polite manner. It is not a competition who is more technical, who draws more lines, who is going to be, perfect. No, this is not the case. The case for you, always remember, trying to make it simple things. You need, these markets are designed to take money away from us, right? What we want is to find a way to make sure that we don't lose. We're going to lose money. I mean, you're going to lose some trades, but you're not going to lose a lot of money, right? It's very, very different from losing a trade from losing money. You're going to have losing trades for sure, but your winning trades, they're going to be more profitable, give you more money, rather than, on the losing trades, you're going to lose less. That's the trick. And for you to do this is for you to have levels. And we used to do that by eye, right? Oh, where's the support and resistance, right? Look at that. Oh, this is my support, that's the resistance, this is a key level. Oh, that is another key level. Oh, that is another key level. Fine, you can do that, right? What's the trick behind? Is it for me to come and judge if your line is accurate on the price level, on the price scale? No, this is not why I'm here. What I'm here is to make sure that when you put lines, technically what you do to your brain, you understand that you need to wait for the price to come back to this level, see that it's reacting as a support, and for you to take action from here. And then after that, you need to know when about you want to exit. So you target from here to there, and that's it. And you close it and you bank your profits. From here to there, it was a nice 35%. Bank it. Put it in the bank. Right? Book your profits. That's what it is. That's the concept behind the lines. For you to know when to start, from which area. If the price action is somewhere here in the middle of nowhere, wait. That's the line telling you, wait. When it's going to hit that level and it's acting support and then turns around, grab it. And then you know whereabouts to exit. This is the alpha and the omega. When to enter and when to exit. If you know these two things, you do not really care about anything else. You don't. Because this is the hardest thing for traders to learn. When to enter, in which level, and when to exit. So, that's it from me today. I don't want to be overextending, overburning you. We spoke about the time frames. We spoke about the horizontals, the gun box, the gangster fib, the settings for it. And we spoke about that you need to react, right? Don't start blaming yourself. Oh, I was wrong. Oh, the market, dumped. Oh, it tricked me. You don't want to waste a minute, a second to your valuable time and to your valuable power of your brain. You don't want to overburn your brain with silly thoughts, right? You've got a limited time on the front of the chart. Maybe you have 1 hour, 2 hours, make the best of it. See the chart. If it doesn't convince you, doesn't give you evidence that it's moving, don't take it. Find another chart. Find a chart that it moves. right? We make money when the price action is moving. We don't make money when the price action is doing consolidation. Price action is static, our profit is static. We don't make money. We need to make money on the move. So find a trend, okay? Trade is your friend. So if you want to go up, you go long. If you want to go short, it goes down, you go short. You don't care. Don't be afraid to go either direction. That's why we're using the futures. Here's another trick or another tip, so to say, an insight. We do not use the futures because of the leverage. We use the futures because we can go in both directions. We can go up and we can go down. In sport, it's only one direction. It only goes up. You can only bet for the up direction in sport, and it's very slow. In futures, you can go both ways. You can bet for performing better, or you can bet for performing worse, going lower. If you bet that it's going to go lower and the price action does go lower, you make money. Happy days. Now, leverage, don't overdo it. Spot is 1x. Do a 3x, do a 5x, do a maximum 10x, and you're going to be fine, I promise you. But start with a 3x, okay? Because you need to learn first the TA, the strategy. Don't let high leverage to ruin your experience while you're trying to learn a strategy. So keep the leverage as minimum as possible for you to give time to embed into your brain the strategy of the futures so that you can go long, going up, or go short, go down. Use the time to learn. Use low leverage. 2, 3, 5 is fine. 3 is 3 times faster than spot. Hallelujah. Right? You don't need to go 50 and 100 and 200x. You don't need it. Right? It's fake. It's BS. Try to stay out of it. Try to learn that you can go either direction. Okay? You want to go up in an uptrend, and you want to go down in a downtrend. Simple as that. Right? Depends your timing. If you managed to enter here because you woke up one morning and it was uptrend, you go long. If you woke up 2 days later and the market is going down and dumping, you don't care why it's dumping. All you care is how much is the percentage that's going to move. Right? That doesn't mean that the market is going to crash or Pepe is dying, or no, it's going down. Everyone is selling. I'm selling. Right? Don't be the salmon. Don't try to go against it. The salmons always lose. The salmons. Right? Why? Because the salmon is going to be eaten by a bear. So be careful with that. Okay? That's it for me, guys. For me today. I'm going to see you next Tuesday. Hold on a minute. Next Tuesday, I'm going to be away. I'm going to be... okay. Next Tuesday is my return flight. So, I'll try to make it. Let's hope that I don't have any delays. I have a return flight on Tuesday, so I may pop in from the airport. Maybe I'm not going to do a big session like I used to on my PC. If I didn't make on time back on Tuesday on my return flight, then I'll make it like a voice call. We're going to do this like a voice, okay? And then we can talk anything you like. Right, okay, ladies and gentlemen, until then, have a wonderful, wonderful week. Have a good one. Please practice, okay? Take your time, right? Learn the strategy, learn to react to the market, right? Learn to shift quickly on the direction. In consolidations, how do you treat consolidations? That maybe is a good time for you to enter slowly, right? You make money on the move. Either go up or go down. Consolidation, you just say, I'm waiting for the odds. I'm thinking it's going to go higher, so let me grab an entry. If you're not sure, wait for the breakout. If it breaks, retest, and then it wants to carry on, then you have a trend, and trend is your friend. That's it. Take it easy. Take your time. Learn. Let your eye learn the charts, okay? And if you are really, really a good beginner, trying to focus on one chart, right? Learn Bitcoin or learn Ethereum or use Pepe, for instance, right? Pepe is a good mover. it moves more and more faster than Bitcoin. So trying to see Pepper, right? There's nothing wrong because it's a meme coin. It's fine. Okay, it's a meme coin. It dumps, it pumps. Okay, but you need movements, right? So do some practice with Pepper. Use one token and stick with it. All you need is a movement. You're not gonna marry Pepper. You're not gonna marry Bitcoin. In futures, you don't own any of them. Okay, so if you're in futures, you don't own Bitcoin. You're betting against the performance. If you're betting going higher or you're betting going lower, and you make the money out of it. Okay, you don't own the tokens and you don't marry the tokens. You don't care about Pepper. You just care about the movement, right? Is it gonna move? I move. It's gonna go like this, I'm going short. If it's going like this, I'm going long. Simple. React to the market. Okay. This is your range. This is the bottom of the range. This is the top of the range. And let me do a little rectangle. Here it is. Here's your range. No, that's not a rectangle. Give me the rectangle. There you go. So here's a range. Here's another range. Blah, 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 blah. And now you have a range on Pepper. Okay. The bottom and the majority of the highs, the majority of the lows, and you have a difficult area of the 50% of the range, right? So if Pepper wants to go higher, it needs to break the 50, claim as a support, and then carry on. Until then, you just wait. You just wait. All right? Simple. Nice and easy. Right, okay, ladies and gentlemen, I have to go. I'll see you next week. Please take care, have fun, be safe. And if you have any questions, please come next week. Bring your questions with me, with you. Ask me or tag me. Write your question on the school. Put a tag with my name on it, right? So if you put a tag like this, like for the new guys, if you put at up front and type freedom, right? You're gonna see my name coming up. Okay, so tag me. And I'll be there. I mean, let's have a look on Discord. Let's go to the school. Blah 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 blah. Let's say hello, people, right? And if you want to tag me, you just put add freedom, and it's gonna be here on the top one, the very first one, right? If you tag me, you see it's been highlighted. That is gonna come to me directly. You see, it's been highlighted. I can see it's yellow. And I know that, people are tagging me, so I come back to see these yellow lines. Okay? Nice and easy. Right, okay, good. Yes. Okay, everyone is answering here. Good. Nice. Right, okay, guys. And also, if you want to come to the web room, you're more than welcome. We've got a lot of stuff going on in the web room. We got the chili chat that we have a good fun here, and we'll talk about, what's going on. We've got the trading chart that we talk about trades and charts, and then we have individual channels. I got my channels under my name, Thalys. I've got coaching and charting. You have Josh, you got Farouk, you got Chris, of course you got Cal. Every day we post things. Every day. I mean, look at that. Carl is posting trades every day, charts everywhere, and also he's moving to Dubai, right? So here we are. So we're posting every day alpha and charts daily, 3, 4, 5, 10 times per day. You can get get tired of us. Chris is posting as well. Charts, setups, how he sees the markets. He has some profits. There we are. 19% on the 10x. You see, we don't do crazy stuff here, right? We don't do silly things. 10x and you get 20%. That is more than your daily target, right? It's 37%. It's good, right? Oh, even 241. What was it? Bring it back. I want to see that one. Okay, 20x, 139%. Wow. 20x on Rune, and he has a 241% return. You see, we don't do crazy stuff here, okay? Lots of stuff. So we have psychology section. Here it is. He's doing some psychology therapy here. He just went to the mountains. He wants to get released, all this stress from the charts. We got Farouk, right? Education series. Everything up here laid out for you, okay? We got Josh. Here's George. He's doing his own way, his own charting. Here's these. Doing setups, area of interest for SUI, right? So we've got lots and lots of stuff. Here it is, a setup, a trade, how things going, Kia. So we've got plenty of stuff. I've got my stuff as well here, got my stuff. I've got my list of my true utility. This is my top 30 tokens that I pay attention, and under the charting section, I have all the charts and setups that I give out as well, right? I have I do more long-term trades. Here's the charts I have on AR, INJ. I post quite, not daily, but I try to post daily, but I do long-term, right? The other guys that post 10 times a day because they're doing intraday and day trading more often, more quicker, and stuff like that, okay? That was another observation, that we hit the 50, we need to stay above the 50, etc. And stuff like that. And days later, here we are. We're struggling with the 50%. I marked the 50%, and then it decided to break above the 50. Well done. And then it lost it again. Okay, so yeah, we're under the 50%. So let me let's go back. Let's have a look on my red list. Bitcoin, and yep, we're still under the 50. Okay, so that's it for me. Have a good day. Have a good week. And I'll see you next week. All right, take care. Bye-bye.